Hello everyone, my name is Smart Money Mo, and in today's video I'm going to teach you how to never be confused by difficult SMC trading strategies again and learn the simple and profitable SMC trading plan that I use and my students use every single day to approach the markets and continue to be profitable. As you guys can see on the right hand side of the screen, these are my recent student results, very recent and up to date, showing you them using these SMC strategies very well. Also, before we get into today's video, I just want to quickly mention the ALQ strategy update to my previous video, which is that we are still profitable. We are now up 21% for this month, just in October. You guys can pause the video and read all of the details to the ALQ strategy, mechanical, back-tested, proven results, just one time frame, and specific golden confirmations that we look for the ALQ strategy. So click the first link in the description, gain access to the mentorship for a one-time fee with a current 20% discount that will be ending soon. But without further ado, let's get right into today's video. Alright everyone, so the first step for this SMC trading plan is understanding how to trade with a bias, because we never want to enter to the markets and go onto the lower time frame completely blind. No, we want to understand what is going on for this particular trading day, and can we find a bias from the higher time frame that will help us keep our win rate high and keep us going and trading in the right direction. So first things first is, before we worry about the lower time frame models and entries, we must get a good bias from the higher time frame. This will set us up a foundation for our trades, which is very important. And you guys should already know a couple of these, but I will explain them real quick. One example of a higher time frame bias is a liquidity sweep. A liquidity sweep is simply where there is some already accumulated liquidity on, for example, let's say the 4-hour time frame, right? And then price makes a level of equal highs, some time in the past, and then on the day that we are going to trade, so let's just say it's Tuesday, this high over here, price swept these equal highs and we made a new high here, and then price just about starts to reverse in the opposite direction. This is what we call a liquidity sweep on the higher time frame. You guys can take a screenshot of this page and keep this in your trading journal. So that is step one, having a higher time frame bias. Another example of a higher time frame bias is a higher time frame supply and demand zone, or a fair value gap. So let's say we are on the 4-hour time frame again, and price recently on the trading day that we are on, or very recently, has tapped into a fair value gap or a supply and demand zone. So let's just say this is a 4-hour fair value gap over here. Price just tapped into it. What does that mean? My higher time frame bias is on the lower time frame. It's going to be downwards. Same thing over here, by the way. I forgot to mention, if we have a liquidity sweep towards the upside, then our bias will be towards the downside. Okay, and lastly, our third sort of bias that we can make from the higher time frame is a previous day low or a previous day high sweep. So let's say this high over here is a previous daily high, and on the day we are going to trade, or a couple of days recent to it, we swept this high, then we can expect price to be reversing in the opposite direction for some time. And these all of these three give us biases for shorts. And if I was to flip these in the opposite direction, they would give us biases for longs. It's just the vice versa, and all of these apply. So remember this as step one for your SMC trading plan. Step two is understanding that structure is king. Whenever we move on to a chart or we're going to analyze, we need to know that the structure is king. So we move on to the middle time frame and find the most recent break of structure. This is going to determine our next steps for the trade and the time and the entry. So let's say our bearish was our bias from the higher time frame was bearish. We would be looking for the most recent bearish break of structure on the middle time frame. So what is a mid time frame? A mid time frame is something, for example, like the 15-minute. Let's say I'm on the 15-minute time frame after seeing, for example, price sweeping a previous day high. So let's take this example right here. Price swept this previous day high. I move on to the 15-minute, and then I see, oh good, a very recent break of structure happened towards the downside on the 15-minute. If there is no break of structure, then wait for a break of structure. We will only trade a trading range if there is a break of structure. If price is yet to break structure, then we could be seeing a potential reversal in the market, and we aren't confirmed with our bias that we are bearish, for example. So in this case, we do have a break of structure, but let's just say if we follow this red line over here, price did this. I would not be going into any shorts from a zone like this, for example. I need to see a break of structure to be entering in on any trades and for my bias to be confirmed. Same thing applies to the bullish example. Let's say previously our higher time frame bias was we tapped into a bullish demand zone on the 4-hour time frame. When I move on, let's say to the 10-minute time frame, I need to see a bullish break of structure towards the upside, telling me that we have confirmed our bias and this is the right way to move. And then we can start thinking about our next steps, like an entry and what time we should trade. If I don't have this break of structure towards the upside, and again, if we follow this red line and instead we see that price drops off, failing to break structure towards the upside, then we have to wait, and we have to wait to see a new break of structure, because this is not a good sign, and a good sign would be to see that price confirms the higher time frame bias with a mid time frame break of structure in that particular direction. So this is number 2. Again, step 1 is all about the higher time frame bias, and step 2 is confirming that bias with a BOS on the middle time frame. Next, we move on to adding confluence to our trade. So we stay onto the 15-minute time frame, or like the 10-minute time frame, and we look for other factors of market structure which is going to help us stack confluence for this trade. So we want everything to come together and flow together for this to become a high probability setup and ensure that we are going to be winning this trade rather than losing. So things that you can look out for in terms of adding confluence is, first of all, a liquidity sweep. So if I move over here, a liquidity sweep is when price accumulates some lows or some highs, for example, and we sweep those equal lows just like we did over here. So price made those equal lows, came down, we swept it, and then we moved in the opposite direction. This is usually a good indication that smart money is getting involved with the particular market and is moving it in our desired direction. Second thing you can look out for is order flow. Order flow is when price has previously respected bullish zones and bullish levels. So let's say this blue dot on my charts always represents that we have bullish order flow. So this means when price came to this level over here, it tapped into something from previous price action. So something on the left hand side, let's say it tapped into a fair value gap, or let's say it tapped into a demand zone, right? So whenever I have a blue dot on a low or a high or anything like that, that means there is order flow getting involved with the market. The next thing we can go over is the Fibonacci / trade range. All this means is that if we take our high to our low where our break of structure is, so let's say this is our break of structure, price broke this structure and it's starting to come down, we take the low of this range, we take the high of this range, and we draw up our Fibonacci, as you can see here and here, and then we look for price to line up our entry zones with the 0.7 and the 0.75 of the Fibonacci. This is very good because it is below the 0.5 mark. If we want to be buying in a market, we want to be buying below the 0.5 mark, because if we buy above this level or around this level, this is where price is going to be most volatile and could go in any direction, and our stop loss would also be in turn very, very big. So we want to be buying at these discounted levels and aiming for the next highs. Another thing we can look out for is inducement. This is when we have a zone. So let's just say we have a demand zone here where the golden levels are. If I just erase everything, we have this zone where this tick is. Just above this zone, we should see a level of inducement or liquidity to be grabbed. So these go hand in hand with each other. What is inducement and what is liquidity to be grabbed? In this case, we can say above this level of demand, we have another demand zone, or we have a level of equal lows. This is inducement for this trade, as price is going to come down, take out all of the early buyers in this market who are trading this level, and instead price is going to liquidate them, and it's going to tap into our zone, and then it's going to move up. We are more likely to win from this particular trading day and this trading range, trading from this zone in comparison to this zone. Therefore, we are going to go with this zone, and we're going to say that this level is a level of inducement and just liquidity waiting to be grabbed. So those are the confluences that you should be looking for, which is now step 3. And lastly, step 4 is just understanding that our trade entry will be coming from a fair value gap or a supply and demand zone, given that the confluences align and everything is valid. Make sure you also manage the trade well. So this is for you to take a screenshot of. Again, take a screenshot of this bullish perfect setup. This is the perfect SMC entry model, and this is your perfect bearish entry model where you will be selling. Your entry will come at this gray box over here and this gray box over here. What do we have here? We have a sweep, break of structure, order flow symbolized by this blue dot. We have the Fibonacci, the golden zones. We have a demand zone over here that we will be entering from, and we have a level of inducement and liquidity to be grabbed. This is the perfect entry model for SMC strategy. And we can also see that it's very well for us to put our SL and TP and everything, because what we will do is we will put our entry here. We will put our SL at the bottom of the order block, because if price goes below this level, we know the trade idea is invalidated. So here we will go with our entry. Here we will go with our SL. And up here we will go with our TP. Why? Because we know that in a bullish structure and in a bullish trend, we should take out the next level of highs. Therefore, this makes very logical sense to be our take profit. And then vice versa for everything on the bearish side. We have a supply zone here. Our SL goes at the top of this supply zone, and our TP goes at the bottom where this low is. And that is the 4-step guide for your SMC, your new SMC trading plan. Make sure to use every single one of these points and screenshot all of these points, because these all go hand in hand. What we're going to do now is we're going to move on to the real life charts. We're going to start analyzing some trades, and I'm going to show you how you can implement this 4-step SMC trading plan into your day-to-day trades. Alright everyone, here I am on GBP USD. We are currently on the 4-hour time frame. I've got the steps on the screen right here. Step 1, higher time frame bias. Step 2, middle time frame break of structure. Step 3, adding confluence. And step 4, entry and manage. So we're going to do that, and we're going to start off here on the 4-hour with a higher time frame bias. And for this trade specifically, I went with a higher time frame bias of a liquidity sweep. We can see right here that there is a level of around 4 equal lows, or 5 even equal lows. 1, 2, 3, 4, 5, right? All accumulated at this level, and price has recently swept this level and begun to move towards the upside. So this is going to be my higher time frame bias, which is that the narrative is that price has swept these equal lows, and then we are going to make a move towards where? Towards the upside, right? And that is my narrative. So very, very simple higher time frame bias here. There are also some other things we can point out, like some fair value gap over here that needs to eventually be filled up, that the overall structure is bullish, and we are quite oversold right now, and we are expecting to go back up to take out these highs. There are some equal highs over here. These are all some reasons for price to push up, and this could potentially be the point where price begins to move towards the upside. Step 2 is we move on to the middle time frame. So I will be moving on to the 15, actually we'll move on to the 10-minute time frame to begin to analyze price. Let me just replay price tab out there. All right, cool. So we can see that price, this is where price swept the level, and after we saw price sweeping this level, it failed to make any new lows. We swept the level here, we left it with this wick over here. Price didn't come below this wick at all. It tried to break below this wick, and it tried again, but we just accumulated more wicks at this level. This tells me that we have some bullish sentiment in this market, and price has the tendency to start going up, at least for some time, right? We can't predict that just because of this it's going to go all the way up, but we can predict that for the time being on this time frame, due to the weakness of sellers and to the support of buyers, that we can predict that price is going to be bullish for a bit. Next thing I see is a recent break of structure towards the upside. Price has broken this previous high, and we call this our BOS towards the upside, our break of previous market structure towards the upside. Here we have a previous high, price broke it with this candle, and we can see everything is good with that. So this confirms our higher time frame bias of that liquidity sweep, and it confirms that we can definitely take buys within this price range. So we identified the middle time frame break structure. Now we wait for step 3, which is adding confluence for this trade. First thing I'm going to do is I'm going to mark up my range. My range is from this low all the way up to this high, and this is my trading range, and this is where I'll be trading. I need to now add as many confluences as I possibly can to make this to show that this trade is a high probability trade. First thing I noticed was that price tapped into this previous bullish fair value gap, and this is the first confluence that I noticed, which is bullish order flow. And yeah, we can see that very clearly that price has tapped into this fair value gap right here, and it has caused price to push towards the upside, telling me that currently buyers are in control of the market and smart money is pushing price upwards. The next thing I can see is that we have a level of equal lows over here, and price has swept that as well. We can see it tapped into this 1, 2, 3, 4, maybe 5 times, and now price has swept this and it has reversed in the opposite direction. This is again another reason for price to be pushing towards the upside, and it's another reason it's another confluence for this trade. So we have liquidity sweep, we have break of structure, we have bullish order flow, and we can now look at the Fibonacci. So we look for our golden levels of 0.7, 0.75, and we can see that there is a beautiful demand zone which lines up perfectly with this level, and we are well below the 0.5 mark. So we are now stacking all of the confluences in our favor. We can now go to a lower time frame and maybe look for some inducement or for some liquidity to be grabbed. I don't see too much in that context. Perhaps you can say that this little demand zone above our demand zone is some inducement and is a level which is going to be grabbed as price comes down towards this level. It's not a strong confluence, but given that we have everything else, this is more than a highly probable trade. So what do we do now? We simply set our limits, set our stop loss down here. We set our stop loss at this low. Why do we set it at this low? Because this is the point where we can say that if price breaks below this point, and especially if it breaks below this point, then our trade becomes invalidated. Where do our TPs go? Our TPs go right at this high for a nice 1-to-3 risk to reward ratio trade. Why does it go at this high? Because if we are expecting price to be bullish, then we would think that this would happen where price breaks this high and forms a new high in the market, meaning that we can target this high as we expect for it to be broken by the trend. And now all we do is we wait and we manage the trade. Price taps in and we hit TP. Not a lot of trade management was necessary. One part of trade management that you could have added for this trade was entering another position, because we saw a lower time frame flip zone. So price took out this supply zone and then it tapped into this demand zone. However, that is a concept for a whole other video. So as you guys can see, with this 4-step trading plan, we were able to secure some profits, which is 3.2% on GBP/USD very recently. This was on Friday 11th of October, and yeah, this strategy is working in the market. A lot of SMC traders have died down and they aren't using the strategy. However, this updated strategy is going to be useful for 2024 and even in 2025, as long as the markets don't change too drastically. So thank you all very much for watching today's video. Hopefully you enjoyed this video and found it beneficial. If you guys want to get involved with the best prop firm in the market, make sure to check out axtraderfirm.com and use code SM2 for 35% off at checkout on any challenge. And yeah, if you want to learn more about the ALQ strategy and the way I trade, then make sure to check the first link in the description for the mentorship. But thank you very much for watching today's video, and I will see you in the next one.